Hi traders, it's Anthony here. Having a look at Avalanche, we may have a trade opportunity. So what I want to do in the video is talk about risk management, and this is a perfect example of how we can get caught out in the market. See this spike? So let's just address this, and then how do we set up our trades to avoid the volatility and make money in the markets. Okay, traded here. A lot of people would have seen this and decided to short this at this high, thinking that, well, we're trading at the top of a range, we've got all this room to move, I'll short it at this level here. But what happened? Okay, it does this. We want to get out of the way of the volatility in the markets. Let's take this from a day trader's perspective. I'm looking for opportunities where I can be in and out fairly quickly. And this is a perfect example of entering a trade, say on the 30-minute time frame or a 5-minute time frame for that matter, and the market whips up and takes out stop loss. In a lot of cases, sudden spikes like this are exactly that. They're designed to tap into liquidity and take out stops. And then we find the market continues on its merry way. In fact, we had a Bitcoin trade that was quite similar. We could have a quick look at that. All right, so we need to dodge the bullets. In fact, this is probably not a bad spot to be shorting this. See how we've pulled back into these dots on the 30-minute time frame here. What does this look like on the 3-minute? Yeah, I mean, we've got the breakout signal that's overextended and a pullback at this point, especially reaching into this level up here, makes a lot of sense. So why don't we go for a quick day trade and we'll short this. I'm going to be trading this from the 30-minute time frame, so my stop loss is going to go around 7,200, and I'll talk about that. So let's just quickly do this. 72.00. Okay, 282 pips, 300. Let's go to 500 pips. What am I prepared to risk here? Okay, so 72 is my stop loss way up here, and I'm willing to risk maybe 1.5% of my account. Let's try that. I'm risking 1.5% of my account. I can see the dollar value, $300, if that stop loss gets hit. So let's do that. Okay, let's short it right there. I'll open this up on the 30-minute chart, and I actually might send that into my my group, my Telegram group, because I don't mind the look of that. Avalanche. Going to go 2-to-1. Short position. Let's have a look at this. Okay, stop loss 2.52. Okay, so risk reward. We're risking 1 to gain 2 at this point. So I'm just going to send this into my Telegram group now. We'll start off with that. Take a snapshot. Snapshot over to Telegram. There it is, pasted in for my members. Back to the charts. Now I like this trade based on, we're predominantly bearish on the higher time frames. We can see down here our multi-time frame indicator. Bearish trend, pull back up into a key level of resistance. So let's just talk about the risk management side of this. Going with the 30-minute time frame, I'm setting my stop loss above our cloud. Okay, we've got the cloud here. Let's just strengthen up so you can see what that is, the blue cloud. Cloud is the space that we have between these dots. It's a complicated matter. These dots are variations of the average true range. We have the average true range down here. Now on the 30-minute time frame, what I'm going to be looking for is to close 80% of my position. That's my entry, and I'm looking for 80% of my position. So what I'm going to be doing is reducing my position size. I'm going to take 80% off at target 1, which is going to be 1 times the value of the ATR down here. So I've got 702 on the ATR. So let's grab the ruler over here, click on the entry, pull it down. We're looking for 702. All right, there it is, 771, 70. Okay, so I'm pretty close to it. That's 70 there, you can see. So that's where I'm wanting my first target, down around here. What I'm going to look to do here is close 80% of my position so that my position size is reduced to 20%. If target 1's not reached, this setup remains. So I've got my stop loss up here. Okay, that stays there. That's my trade setup. I've got a stop loss in place. I've got a target. Okay, that's my trading plan. Okay, I want these levels. If my target doesn't get hit, This wanders up a little further and does whatever it does. At some stage it'll come down, reach my target, and hopefully, we gain some distance with it, right? Or it trades up and takes my stop loss out. So we don't want to set this too tight. I'm thinking as a general rule, the best spot for a stop loss is above this cloud on the 30-minute time frame. And setting your risk, maximum 2% of your account size. Okay, at this point here, but right now, I'm risking 1.5% of my account size. All right, so now it's up to you as far as your targets go. You can go for 80% of target 1. So we'll call this T1 80%. See down here, we have a level here, a support level. So we could go target 2 down here if you wanted to. Take another 10%. Look for some obvious levels here for target 3. So go out of here and maybe open up the 4-hour chart. Let's have a look. Target 3 could be this low here. That makes sense. Target 4, back around here, these lows. You can set up these targets and take partial profit all the way down if you want to. But always have a look left. Target 4 comes into play with this key weekly level here we can see, this orange line. Right, go for these levels, and then we've got a daily level back here. Yeah, back there's a daily level. So set your target up just short of the level, just above it. Okay, so now we've gained a little bit of ground here. Let's just go out of here now. Now we've nearly reached our target 1. So what I might do now is let my guys know to close their, let's go to a 5-minute chart, their 80%. It's close enough. Let's do it. Okay, I'll take a snapshot, close 80% now. And of course I'm doing the video to explain this trade. All right, so what I'll do now is I'll close 80%, close position, partial close. Let's just go 80. We've got 111. I'm just going to go 80. That'll do. Partially close. All right, so now we can move our stop loss. So let's have a look and see what we've got. Account history. Okay, we've got $44 in the bag. I'm going to work from a dollar value now. $44 in the bag. Pull the stop loss down. Let's just see what we've got here. See? If this stop loss gets taken out now, this is more or less break even, 0 risk involved. Now I'm on a 5-minute chart. Let's talk about this. We've reduced our position size down to 20% of our original position. Let's open it up on the 30-minute chart. Okay, let's consider where the stop loss is at the moment. Have a look at this cloud. Let me just increase the cloud here. Let me show you something. So I'll just make it a little bit over the top obvious. Take a look back and see where price is trading in relation to the cloud. Now, when the price is under the cloud, how many times has it whipped through the cloud? So we want to go back and have a look at, say, from this break here. Okay, we had a break out of the cloud. See how we spiked up, didn't break into the cloud here? Okay, we spiked up and broke into the cloud here. Now, your stop loss would have been taken out. If you set your stop loss anywhere in through this cloud, you would have been taken out. So you might want to consider this daily level here, setting your stop loss up above here, and you would have managed to come out unscathed, pretty much. So you have more opportunity to profit with a wider stop loss. Okay, now we know that this is break even. If I was to pull my stop loss above the cloud here and trail it from this perspective, now let's do that. Given that I've taken 44, I think it is, and this is close to 84, we've got about a $40 discrepancy. So I will lose $40 if this gets taken out. It'll be a losing trade. Am I willing to risk $40 of my money to leave my stop loss there? I think that was the case. 44. Yep, okay. Approximately $40 is what's at risk here. Am I willing to risk $40 to see if we can gain whatever that's worth? Let's just pull this down here and have a look. Another 171. I've already closed 44. Plus 171 if we reach target. Is it worth the risk? So this is what you need to weigh up. And now you can see that you're risking 0.41% of your account down here. So, I mean, this is completely up to you. You can rearrange this to the levels where you feel most comfortable. All right, now if you're struggling a little bit, go for break even. We have 44 in the bag. There's your broker fees and spread or whatever covered. So you're going to come out break even if you leave your stop loss here. So less risk. Stop loss could get taken out, sure, but you're in a no risk trade at the moment. Now we had a a Bitcoin trade. I just want to have a quick look at that. That was the last one I posted yesterday, Friday, I think it was. So let's just go back to Bitcoin and have a quick look at that, and then we'll wrap up the video, because we had a similar situation. We had a short Bitcoin USDT, and you've got to watch these spikes in the market. Now, it was a 30-minute chart. Let me just take out the, back this off a little bit. Where were we? It could have been here. We were looking at shorting this, and I posted this into Telegram. It was a short. Yeah, it could have been this reversal here. Let's give this a shot. But look what happened. This is a stop run. This is a deliberate stop run, and this is what we risk. So we're on 30-minute chart here, and look where it traded to. You could, if you want to, when the market's trending, set your stop loss above the 30-minute cloud here and trail it down. You could do that. We closed out 80%, and then the market spiked up and took out a bunch of stops, wiped out a lot of people, and then traded in the direction of the trade. All right, so that's the thing. That's the risk involved here. You're going to find this market manipulation is very common. Okay, so we've got a bearish trend. What happens? Okay, we get this fake out. Everyone piles in short. Stop losses galore above here. And then what happens? Big players have enough funds, have enough capital to move this where they want it to go. And it goes right up into here, wipes out everyone's stop losses, and then they trade down. All right, so watch out. Okay, so you could go for the 30-minute chart, set your stop losses above until you've taken your 80% if you want to. In most cases, you're going to do well, but every now and again, this is going to spike up and it'll take you out. And worst case scenario, with the way we're trading, there's minimal loss. Just give it a little bit of room to breathe. When you start to see it roll over like this, then you can tighten up your stop loss. Practice makes perfect. So let's just go back to our open trade here, Avalanche. So we're just coming back to now what you're willing to risk, and I'm going with the 30-minute time frame. I've got my stop loss set up midway through the cloud. So there's the cloud. Okay, I'm midway, and that's generally pretty good, especially when we're trading under the cloud. Midway is not a bad setup. Generally going to do okay with that. We've closed 80%. This is risk-free now, and if we gain a little bit of traction, you could then tighten up your stop loss, follow these dots down. So from this point on, you commit to your stop loss. Whatever you do, never take it in the opposite direction, ever. Once you commit to your stop loss, leave it at that and let it get taken out. Now, if this continues down, pull your stop loss down accordingly, and then every move from here is going to put you in the money. As the market moves, if we get it, trail it down, but you leave your stop loss where it is. You don't take it the other way. This is your profit margin here now. Hope that makes sense. Okay, guys, I'll wrap the video up at that. Jump on board, links below, smash the likes, leave a comment. Look forward to seeing you in Telegram. Have a great day.